The stock market has taken a hit, with the S&P 500 officially entering correction territory after dropping 10% from its highs. However, small-cap stocks have suffered even more. The Russell 2000 index, which tracks small-cap companies, is down by over 18% from its late 2024 peak. Concerns over a potential recession have weighed heavily on these stocks, as smaller businesses tend to be more vulnerable in uncertain economic times. But here's the flip side. Small caps were already undervalued at the start of the year, and with this additional drop, they look even more enticing for long-term investors. That's why the Vanguard Russell 2000 ETF is now at the top of my buy list. What is the Vanguard Russell 2000 ETF? The Vanguard Russell 2000 ETF is an index fund designed to track the Russell 2000 index, a key benchmark for small-cap stocks. Market cap, $3.3 billion. Diversification. No single stock makes up more than 0.6% of the fund. Top holdings, Sprouts Farmers Market, Insmed, and Vaxcyte. Expense ratio, just 0.07%, meaning only $7 in annual fees per $10,000 invested. This ETF offers investors exposure to a broad portfolio of small-cap stocks, an ideal way to participate in this segment without picking individual stocks. A massive valuation gap between small and large caps. The valuation gap between small cap and large cap stocks has reached historic levels. Metric: S&P 500, Russell 2000. P/E ratio: 27.5, 17.8. P/B ratio: 5.0, 2.0. Earnings growth: 18.9%, 14.3%. Source: Vanguard. Despite the AI-driven surge in large-cap tech stocks, small caps continue to trade at historically cheap valuations. While the S&P 500 deserves a premium due to its concentration in high-growth tech stocks, the valuation gap is wider than it has been in decades, creating a potential buying opportunity. Why small caps could be the big winners? Interest rate cuts on the horizon. The Federal Reserve is expected to cut rates 3 to 4 times this year, a significant shift from the one-rate cut forecast at the start of 2025. Since small-cap companies rely more on borrowed money, lower rates could provide a major boost. Capital rotation into stocks. As rates decline, investors will likely move money out of treasuries and CDs, increasing demand for stocks, especially small caps, which tend to be riskier but offer greater growth potential. Potential economic tailwinds. Factors like tax cuts, regulatory reforms, and easing tariff concerns could help small-cap companies regain their footing. Nobody knows if the market's down and is over. If economic conditions worsen, small caps could fall further before they recover. However, from a long-term investment perspective, the Vanguard Russell 2000 ETF looks like a fantastic opportunity. Smart investors who take advantage of these historically low valuations today may look back in a few years and be very glad they did.